So we just passed the mid-year point in real estate. And what does this mean? Fun fact, in 2022, sales were down anywhere from 36 to 44% versus 2021. If we compare today to last year, we're actually up anywhere from 7 to 49%. And can you believe that in some pockets, we are actually up year over year versus last year? And 45 to 47% of homes that sold in June actually sold at full price or higher. Hey, what's up, everybody? My name is Rene and I run a real estate team in the Oakville, Burlington, and Hamilton region. Before we get into the stats, if you like this information in this video, don't forget to give us a thumbs up. And if you'd like to see more of this content, don't forget to subscribe, tell your friends about it. And if there's something that we missed in the video, click the link in the description. I'd love to book a one-to-one with you and talk about anything and everything real estate. So now that we've passed the mid-year point in real estate, things are looking more real in this market. And what I mean by that is last June, prices were up anywhere from 5, 10, 15, up to 30% versus the previous year. When we look at this year, it's been a year of adjustments, and we've seen this with more inventory in some cases. Obviously, the interest rates have been an issue, but buyers are getting used to it. And we're also seeing homes take a little longer to sell. We're seeing around 18 days on market, which is still pretty good compared to the previous years. In terms of what's happened since 2022 with sales, we have seen some massive improvements, and a lot of the buyers are finally getting used to the rates that are out there. And even though we've had a couple increases in the last few months, again, the resilience of this market is very strong, and we're seeing more immigration as well, so that's always helping. One thing I've noticed personally with clients of mine is that there's certain investors that are offloading properties, and they're actually being pretty aggressive with their price, and this is helping the sales. In terms of year over year prices, this is awesome. When we look at some of the markets, we actually see that anywhere from 2 to 14% higher than last year, which is absolutely nuts. For the first 6 months of this year, we were talking about how we were down 20, 30%. And now we're actually up in some cases anywhere from 2 to 14%. The nice thing here is that we are getting closer to seeing more of a stable market. I remember saying last year that I predicted sometime in the fall that these numbers were going to stabilize and that we might be in the green. We're already seeing green, and that's great news. 45 to 47% of homes that sold in June. It's crazy. We're looking at this on a daily, weekly, and monthly basis, and we did notice in Oakville, 45% of these homes were selling at full price or higher. In Burlington, we noticed 48%, and in Hamilton, we noticed 47%. So it's definitely scattered. Some pockets are selling in bidding war still. In other pockets, we're seeing that they're taking a little longer, but as a whole, we're seeing a lot of homes sell at full price or higher. Now, in terms of inventory versus last year, we're actually down anywhere from 10 to 18%. In terms of the sales I mentioned earlier, we're seeing anywhere from 7 to 49% higher. This is incredible because earlier in the year, we were down anywhere from 30 to 40% in some cases. Now, list price versus selling price, this is a bit skewed. And in some pockets, yes, you can still negotiate anywhere from 3 to 5%, but in other pockets, it's actually selling in bidding wars, and it's going anywhere from 5 to 10% higher. Now, the sales price versus June of 2022, this is really good. What we're noticing here in the detached market is there's some pockets that it's down 8% versus last year, but in some pockets it's actually up 6%. Townhouses, it's actually down 7%, but we're noticing in other pockets it is up 14%. And the condo market is down anywhere from 4%, but also as high as 8%. And that is good news. So let's talk about how the market did in Oakville, Burlington, and Hamilton. Now, year over year, this is great news. I mentioned earlier, we're starting to see some gains. When we look at Oakville detached market was awesome. It was up 6% versus the previous year. The townhouse market was up 14%, and the condo market stayed flat at 0%. That is astronomical, and it's great news for Oakville. Burlington was down 8% for detached. It was actually flat for townhouse at 0%, and the condo market went up 8%. So great job, Burlington condos. Hamilton, 2% increase for detached market, 7% down for townhouse market, and the condo market was actually down 4%. Now, it's unbelievable. A lot of people aren't talking about how we are doing year over year, and that is an incredible number. And I feel that over these next few months, we could see even better growth there. Now let's compare it month over month. Don't panic. Don't worry about this. I know there's some red here, but here we go. Oakville, 1% down in the detached market, 1% down for the townhouse market, and 4% down for the condo market. Not to worry. Burlington stayed flat at 0% for the detached market. The townhouse market was down 8%, and the condo market was up 2%. Hamilton was down across the board. So 2% for the detached market, 6% for the townhouse market, and 4% for the condo market. But like I said, nothing to worry about. We're tracking month over month. The previous month, we were actually up very well. And I mean, this is going to be a trend we're going to monitor every month, but I feel we're headed in the right direction. And here's some good news about if you've lived in a home for 3 years. In Oakville, the detached market is up 8%. The townhouse market is up 9%. And the condo market is up 7%. This is on an annual basis over the last 3 years. Burlington is up 10% for detached, 8% for the townhouse market, and you're up 12% for the condo market. Hamilton is up 11% for the detached market, and 15% for the townhouse market, and 12% for the condo market. This is awesome. Historically, people would be happy if you're up anywhere from 5 to 7% annually. I just named some higher appreciation percentages. So that's really good news. All right, here's some final thoughts. If you're a buyer, you got to seize the moment, and there's a lot of opportunities out there. There's some gems and there's some deals. You got to go get it. If you're a seller, stay optimistic. I feel that we're headed in the right direction, and like my stats just proved, we are definitely ahead of schedule, and I feel that being up year over year in home prices in some pockets is a great thing for you to understand. Have confidence, we're gonna get there. A first-time home buyer, do all your due diligence. Get pre-approved, get educated on the market, Google realtors, check out their reviews, look at them online, see if they're active. Very important to do all your due diligence before getting out there and seeing some homes. If you're an investor, the rental market is awesome right now. We've had very, very low inventory over the last year. And I feel that if you are trying to get into the market as an investor, there's great opportunity. Make sure your realtor does some number crunching to make sure that cash flow and ROI is good. And if you're on the fence, whether you're a buyer or you're a seller, that's all good. It's good to just do some research while you're on the fence. Google realtors, look at some YouTube videos on the market and what's happening at ground level. But don't wait till the last minute to just choose and rush a realtor. Do some homework while you're just thinking about it, and it's always gonna pay off. Thank you for watching our video. We hope you enjoyed it. If you did, give us a thumbs up. Also, if this content is something that you'd like to see more of on a monthly basis, don't forget to subscribe. And if we did miss something in here, or you're curious about a topic that we didn't discuss, click the link in the description. Book a 1-to-1. I'd love to talk about anything and everything real estate. We live here, and so should you.